Before we dive in with the pick of the week, we're going to explain the importance of having a strategy, the importance of having structure, the importance of measuring the downside potential in comparison to that upside potential. Make those executive decisions as to what's going to be added in your portfolio, at what time, at what level, and in your mind, where are you coming out of that risk? That's the most important thing. What's your exit strategy? What's your exit plan? We're going to be going over all of that today, guys. We've set limit orders in there, 50% limit orders. And I'm showing you the entries. You've been following me with the entries. We've been added to the portfolio. It's been full, it's been transparent. We're going to see where this thing goes. So the crypto market's down between 10 and 20% on the week. You can see some big moves here. Lido down 18.2%. You got Fetch down 13.9%. Phantom down 13.2%. So how is the crypto portfolio looking? This is the importance of getting those killer entries at those killer levels, and ensuring that the downside risk is minimal. Where the crypto markets drop between 10 and 20%, our portfolio's dropped 4.4%. Now we've got the upside to ride. So what one am I going to be adding to the portfolio today? Why am I going to be adding it to the portfolio? And what is that upside potential? Let's dive in. Welcome. Firstly, I'm Keith. This is Crypto Bullseye, and we're going to show you exactly how to build a portfolio from scratch with a minimal amount of capital at risk. So I've only started with $50 on this. We've got $200 in there at the moment. I'm going to be adding one today. I'm going to show you why I'm adding it today. But firstly, let's go over what's already in the portfolio. Is there a second chance entry? What price did I get this for? So you see Arbitrum. This is Arbitrum. We've had a break. We've had a retest on Arbitrum. And it's sitting at 72 cents at the moment. I managed to get it just under 80 cents. So that's a better entry than what I got it at. Arbitrum's looking good. What's the downside risk in comparison to the upside? We've measured it already. We measured it last week. You've got the downside risk, which is 29%. You've got the upside risk to the take profit level of 184%. The upside outweighs the downside by a huge amount. Why am I taking 50% at this level? What is this level? This is $2.05, and I'm taking 50% off this level because it covers my entry and then some, and I can allocate that at better entries for different cryptocurrencies at these low levels exactly again. It's going to be rinse and repeat, rinse and repeat, rinse and repeat. That's what we're going to be doing. So Beam's the next one. Exactly the same. We've had a big break. We've had a retest. Now we've measured the upside compared to the downside. The downside from where price action's sitting, 28%, the upside to our level, 629%. Now, when you look at Beam, you look at this, it looks like a bull market run. This was December 2023. When you zoom out, you've got all this upside potential. So we're not being greedy, but 600% taking 50% off makes sense to me. It more than covers your capital, more than covers it. That's what we're trying to do, trying to cover our capital while keeping cryptocurrencies in the portfolio to do their thing. Once we start getting into the bull run, I'll be starting to diversify out of the 50% into lower risk assets, Bitcoin, Ethereum, dollars, possibly Solana. Right, okay, so Beam's looking good still. Beam's looking good. We've had the break, we've had the retest, we've measured the upside compared to the downside, and we're going to let that one ride. Next one in the portfolio is Scallop. Exactly the same, guys. Exactly the same. Big break, big retest. Big break, big retest. We've got our retest area set. That's still in a buy zone entry. We've measured the downside potential, which was from where price is now, 40%. Upside potential to the limit order, 223%. Limit order set at 61 cents. 50% off, 61 cents. Next one, a left zero, exactly the same. We've had a slight break on a left zero. It's holding a base at 42 cents. And when you look at the downside potential in comparison to the upside potential, you can see that the upside is greater than the downside. I've got my take profit set at $1.62, 50% off the table, $1.62 on the left zero. So last week's pick, it's actually 5 in the portfolio, not 4. Last week's pick was Proppy. Had the break, had the retest, holding support, measured the downside compared to the upside, and we're looking at 145% to the upside. That's less conservative. You can see this is one of the new cryptocurrencies. We're holding 786. It looks like, or the 886. It looks like we're holding the 786. So we've held this as a base. You've hit it once, you've come back down, you've hit it twice, we've broken trend, and we've come back and we're retesting this the third time. Remember, inverse head and shoulders, left shoulder, head, right shoulder, break that, surge to the upside. Then you can protect yourself below the low should you wish to do so. Depends what you're looking for. Trading, investing, trading, investing. If you're investing, you're looking longer time frame. Right, okay, pick for the week. I'm just going to briefly go over the ones that's on the watch list. So these are all on the watch list. You've got Theta. What I like about that is 651-day range. This is a 651-day range. We've broken through with some velocity. Now we've dropped from its high 60% to the downside. We're right next to trend. What's happening? Inverse head and shoulders. Wait for the break. Break's going to coincide with the big break of trend. Bam. Then you're off. Then you're off. Theta looks good. Theta looks good for me. We've got GRT next. You can see this. It's been in a long range here. Been in a long range for a long time. What's happened? Broken range, holding support. So GRT looks good to me. However, if we did drop back into this range, that's going to be a drop. You need to factor this in, 65%. Can we afford to drop 65% on something? What I would do on this is wait for the break. Simple trend line, guys, simple trend line. Once you've broke, confirmation that the bulls have regained momentum, protect yourself below the low, and then you're away. So GRT, I'm not sure about GRT. Then you've got this, Matic. Why do I like Matic? We're right on this support. 1, 2, 3, 4, 5, 6, 7, 8 times this is held as support. What's the downside? Downside risk is 36%. What's the upside risk to this sideways trend? This is something that's hit time and time again. 147%. It's not as big a move to the upside. It's a more probable move to the upside. I think that I'm going to be adding Matic to the portfolio this week. We'll just go over the next few. We've got Flux. We've got downside potential there. Possibly 55%. Can we take 55% to the downside? Upside 88%. It doesn't look as good. And you've got Celestia here, holding the 886. Holding the 786. We fell through to the 886 Fibonacci retracement. We fell back through, or we jumped back through, broke that resistance to flip support. We've held once, twice, 3 times as support. I think we need to wait for the break on Celestia. Fetch AI. Look at this, guys. You've got this bump here, you've got a bump there, you put in 2 higher highs, and then you've had an accumulator phase for the accumulated phase for 1,069 days. Once you break out the range, you break out with velocity, you've got no resistance, no local resistance to go by, and then we had a surge to the upside from that break. A surge to the upside from that break of 222%. What happens? Comes back down. Comes back down. 69% to the downside. Are you better off getting it up here, or are you better off getting it down here? It's holding support. This is the support. This is the support. You can see resistance, resistance, bam. It's come back through support. Simple, guys. Trend line, trend line. Wait for the break. Once you've got the break, you can see again here. See these time and time again. Inverse head and shoulders, break the neckline, bam, you're gone. Pepe's the last one. Run too much for me. If I do get a wick to the downside here as some kind of a 786 or a 618 retracement, I'm interested. If something like this happens, got a bull flag, break to the downside, retest, come back down, 618, I'd be interested in this level. From where price action is now, that is 42% to the downside. So I'd be happy with 42% to the downside. Right, okay, so it's looking like it's Matic. Matic. It's looking like it's Matic, guys. That's the most conservative pick for me this week. So adding Matic to the portfolio, I'll be building that inside of CoinGecko. So go onto your CoinGecko, guys. Add that to your portfolio if that's what you're adding. If you're adding something different, add that to your portfolio. But make sure you keep track. Make sure you know what your exit strategy is. Make sure that you set those limit orders and don't be greedy. Take care from me, guys. Check out the rest of my portfolio picks. I've made a playlist for them, so you can check those out there. And I'll see you in the next one.